Well, let's keep it going with oil. Now, as war-driven volatility in West Asia rattles oil markets in 2026, global fashion brands are discovering that sustainability is no longer just good optics, it may be good business insurance. For years, retailers marketed eco-friendly fashion as a climate-conscious choice. But with crude prices swinging sharply amid conflict and shipping disruptions, brands are increasingly treating sustainability as a hedge against fossil fuel shocks that directly impact manufacturing, logistics, and raw material costs. The urgency is clear. According to SkyQuest, the global sustainable financial market is projected to expand from $11.78 billion today to more than $58 billion by 2033. 2033, beg your pardon. Yet, that growth is unfolding against a harsh reality. Modern fashion is still deeply stitched into the oil economy. A report by the Changing Markets Foundation says synthetic fibers now account for 1.35% of global oil consumption, more than Spain's annual oil use. Data from the United Nations Environment Programme, or UNEP, shows that polyester and other synthetics now make up 68% of all clothing materials used globally. That means every spike in oil prices feeds directly into the cost of producing fast fashion, polyester packaging, shipping, and factory operations all become more expensive when crude surges. For fashion executives, investing in recycled fabrics, circular supply chains, and lower energy production is increasingly becoming a strategy to reduce exposure to geopolitical turbulence. But consumers may not be willing to pay the price for that transition. Fortune Business Insights say sustainable garments still cost at least 30% more because of ethical sourcing and certification expenses. At a time when inflation continues to squeeze household budgets, affordability is winning over ethics for many shoppers. A McKinsey consumer survey found 40% of US shoppers bought from ultra-fast fashion platforms in the past year. That is despite mounting environmental criticism of the sector. So overall, the result is a growing contradiction. Brands are trying to go greener to protect margins from oil shocks, while consumers are still chasing the cheapest deal off the rack.